Imagine a marketplace, but instead of fruits, vegetables, or clothing, it's shares of companies that are up for grabs. This, my friends, is the thrilling world of the stock market. The stock market is the grand arena where businesses and investors engage in a ceaseless dance of buying and selling. It's a place where fortunes are made, dreams are realized, and sometimes where bubbles burst. But what exactly goes on in this bustling bazaar of shares and stocks? At its core, the stock market is a public market for trading shares of companies. When a company decides to go public, it sells a part of itself to investors in the form of shares. This process, known as an initial public offering or IPO, allows companies to raise capital for expansion, new projects, or to pay off debts. Now, you might wonder, why would anyone want to buy these shares? Well, owning a share is essentially owning a small piece of the company. If the company performs well, the value of the shares goes up. If it doesn't, the value can plummet. The key to successful investing, then, lies in picking the right companies to invest in at the right time. But how does one do that? Enter the two main schools of thought in investing: fundamental analysis and technical analysis. Fundamental analysis involves evaluating a company's financials, its industry position, and market conditions to assess its intrinsic value. On the other hand, technical analysis focuses on statistical trends such as prices and volume. Yet, investing in the stock market is not without risks. The value of stocks can be influenced by a variety of factors, from economic indicators and political events to market sentiment and even weather patterns. It's essential to have a well-diversified portfolio to spread out the risk and potentially increase returns. However, one must remember that the stock market is not a get-rich-quick scheme. It requires patience, discipline, and a sound strategy. It's about investing in the future, in companies and sectors that you believe will grow over time. To recap, the stock market is a marketplace for buying and selling shares of companies. Companies go public to raise capital, and investors buy shares in the hope of earning a return. The two main approaches to investing are fundamental analysis and technical analysis, and it's crucial to diversify your portfolio to manage risk. Remember, investing is a long-term game, requiring patience, discipline, and a strategic approach. So, whether you're a seasoned investor or a novice just dipping your toes into the world of investing, the stock market offers a fascinating playground. It might seem complex and daunting at first, but with understanding and experience, it can become a rewarding journey. After all, as the saying goes, the stock market is filled with individuals who know the price of everything but the value of nothing.